I really have no idea. The thing you're talking about is kind of interesting, but let's just quickly talk about today's topic, and then I'll come back to your conversation, okay? So, in today's conversation, I want to talk about business loan with a bad or fair credit and no money. How do you get a large amount no matter what? Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka, and let's roll. In today's conversation, I want to talk to you about how to get a large business loan with no money, and especially if you have a bad or fair credit. This is really important. It's important first to think about planning. Okay, if your goal is to get that business loan, you want to plan. When I talk about planning, I'm talking about having an EIN. Very important. You need to have an employer identification number. It takes about 5 minutes, 10 minutes. Go to the IRS website, you apply for it, you get it. This is important. This is the equivalent of your company's social security number, and it has other purposes, if you will, and other benefits. You want to think about licenses and permits, okay? We are speaking here about getting legit. It's important. I want you to remember that. Get your licenses and permits. What about accounting? You need to set up accounting. You need to set up accounting for your business. And I'm not asking you to have a PhD in accounting. If you have no idea of what accounting is, you can outsource the whole thing. You can hire somebody in-house to do it. You can hire a local CPA. You can actually use software such as a QuickBooks Online or a Wave or Xero for that. Think about opening a business checking account. This is really important. Did you hear that? Important. Big decision time. Big decision time. Do you currently have you set up business accounting? Do you have a business checking account? Those are important things. Don't tell me, oh, I'm going to do this probably 3 or 6 months from now. No. You need to do it now. Start now, okay? If your goal is to get that big business loan with bad or fair credit and no money, you need to set the foundation right now. Think about your legal structure. Are you an LLC? Are you an LLP? Talk to me about that. Are you a sole proprietorship? There's nothing wrong with sole proprietorship, but the only thing is, if you're trying to get a large business loan with bad or fair credit and no money, having the proper legal structure is important, and a sole proprietorship is not really the best status, if you will, to help you help you achieve your goal, okay? You need to think about your initial cost. Home office, are you working from home, or are you using a co-working space, or do you have an office? Those are important things because they will project an image of legitimacy. You want to make sure everybody who looks at your business think what? This is a legit business. Okay? This is exactly how you do it. The second thing you need to do, you need to understand the basics. Now, when we talk about no money, what does that mean? Talk to me about that. So the title is, the conversation is about how to get a big business loan with a bad or fair credit and no money. What does that mean? You have a business, so you must have some kind of money. Hello, right? It's all about, no money means what? No money probably means no sales, probably at the business level, but at the personal level, you must have some kaching. Otherwise, why do you have a business in the first place? So no money at the business level is what we mean in this show. But at the personal level, you must have some dough. Money. This is important. Let's talk about that. So probably you have a checking account or a savings account. You have some cash, 5,000, 10,000, or 1,000. Whatever you need to set up the business must come from your personal savings. This is important. So the question is, what do you bring to the table? You need to understand, if you go to a lender and say, listen, I have no money, I have bad or fair credit, they're not going to give you any business loan. You need to think ahead. You need to have a strategy. What are you bringing to the table? Talk to me about that. Talk to me about your competitive edge. Do you have sales in the pipeline? Do you have some sales promises? Has anyone in the community, as a big client, promised you that they're going to buy from you? Talk to me about that. Do you have expertise in the field? Expertise that you only are the one having, or it's very rare in your industry? Do you have a patent? What is your IP status, your intellectual property status? What is the strength of your existing vendor or customer network? Do you have partnerships with third parties? What I'm trying to say here is that if you are telling me that you want a business loan, a large business loan with bad or fair credit and no money, that's fine. But the no money means that it's no money at the business level, but you got to have something else to have a competitive edge. Otherwise, why are you in business in the first place? Okay, we're not here. My goal here is to give you advice so you can be unstoppable and get the credit that you need. But you got to have something else. You need to have some skin in the game. Okay, don't just come to the table, to the borrowing table, having nothing. You got to have something. Let us talk about number 3. You want to pay attention to your finances. And I'm talking here about the finances at the business level. Your business's finances, okay? Yes, you have no money, you have bad credit, you have fair credit, and you want to have a large business loan. Okay, let's have a conversation about that. You need to prepare something called projected financial statements. And please, don't go online and just type projected financial statement and download any kind of weird templates. No, my job is to make you unstoppable. My job is to give you all the tools that are needed to get the loan that you need. Okay, so you need to invest in preparing projected financial statements that are compelling. We're speaking here about a balance sheet, a projected balance sheet, a cash flow statements, a P&L, profit and loss statements, and an owner's equity statement. And all of these things must have projected data. I'm not asking you to lie. I'm asking you to have realistic data. And you can do this. You can actually hire someone. And this is where you need to invest in your business, okay? The little cash that you have on the side, you want to pay someone $100 or $150, a CPA or a local accountant who has experience in your industry to prepare projected financial statements. Don't take this lightly, okay? Don't tell anyone that I didn't tell you. It is important to put it down. And in the balance sheet, in the cash flow statements, in the P&L, in the owner's equity statement, you want to project data that are aligned to how you see your business. You also need to have a business plan. Yep, write it down. Write it down right now. You need to have a business plan. And because the bottom line is you are asking a quintessential question. Why should a lender trust your business? You have no money, you have a bad credit, but why should it trust you? You got to bring something to the table, and you actually communicate your competitive edge in the business plan and in the projected data, in the projected financial statements. Okay, you want to mention in the business plan your vision, the industry outlook. You want to have a nice SWOT analysis. When we talk about SWOT analysis, we are talking about what? Strengths, weaknesses, opportunities, and threats. We have an entire show actually focused on business plans. You can actually do things manually. You can hire someone to do it for you. You can actually buy software that will help you prepare a business plan yourself. Or again, you can actually go on sites such as Fiverr, Upwork, TopTal. You have freelancer.com and hire someone to get the job done. The next thing you want to do here, folks, number 4, you want to have an idea of what kind of loans you want to go after. It's important. If you have a bad or fair credit score and you have no money, you cannot qualify for all types of loans. You want to focus on a few loans that you can qualify for. So this is why it's important to familiarize yourself with the loan typology that applies to people in your category. First, you want to think about asset-based lending rates. Overall, we're talking about here asset-based loans. So the kind of loans you want are called either asset-based or asset-backed loans. Those are collateralized loans. In other words, the lender is actually sharing the risk with you, okay? Because we have a default risk here. And the thing here is if you have bad or poor credit, if you have bad or fair credit, this is because you have made some poor financial choices in the past, and the lender is going to look at you as a high risk. Let me just be clear with you. But this is not a big deal. Honestly, it's not a big deal because lenders are not, they're smart. They know that people change all the time. But the kind of loans that you can qualify for are called asset-based loans. And when we talk about assets, We are talking about there is a constellation of collateral assets that you can use for this kind of lending. So we're talking about accounts receivable. So for example, if you are a service-based business that invoices customers, any receivables due within 30 to 90 days can be eligible as collateral for an asset-based loan. Okay, in this case, the size of the loan your business qualifies for is proportional to your outstanding receivables. So the more you are invoicing and the greater the value of your invoices, the more you'll be able to borrow. It's important to note that when you have an asset-based loan like an accounts receivable loan, the quality of the customers is important. Also, think about inventory. If you operate a manufacturing, wholesale, or retail business, chances are you have a stockpile of inventory, right? In this case, inventory can serve as collateral for asset-based lending. So this is what it is when, for example, a lender will appraise inventory that you have to determine its resale value, and that value can be used to secure your loan. You can also think about machinery or equipment. What I'm trying to say here is if you want to buy machinery or equipment, you can actually collateralize the loan by using the asset, this machinery, as the collateral for the loan. You can also try real estate. Okay, in some cases, any real estate that a business holds, like owned retail or manufacturing space, land owned by a development company or other real estate property, can be considered a fixed asset eligible for asset-based lending. And there are some advantages for asset-based lending. There are a lot of advantages. You basically, those are easier to qualify for. If you have those loans, are easier to qualify for. You have less personal risk required, and you have flexible financing solutions. So those are things you need to think about. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation today about what? How do you get a large business loan with bad or fair credit and no money? Step number 5, you need to understand who the players are, who the lenders are, okay? Because this is a very, the kind of loan you can qualify for is known as asset-based loan. And you have a few players who actually play around this sector. So you have banks, of course, banks have that. They actually provide those loans. You have credit unions, you have online lenders, you have alternative lenders, and you have MCA lenders, merchant cash advance lenders. It's kind of important. People have the wrong idea that if you have a bad or fair credit and you have no money, banks will just avoid you. Not at all. It depends on the loan you are trying to get from them, as well as your MPR, your multi-product relationship with the bank. So when we talk about merchant cash advance, we're talking about purchase or future sale agreement. So this basically, the lender will advance you a lump sum of money upfront, okay, with a discounted purchase to pay back. So the advance is repaid by taking a fixed percentage of future credit card sales batches until the payback amount is paid in full. One thing I want to say is if you have electronic sales, that's perfect. But if you have a lot of cash sales, you may not qualify for that. And so when we talk about alternative lenders, we are speaking about players such as the Brass Financial Group, Clarify Capital, Advance Point, Unsecured Finances, and Funding Pilot. So this is a non-exhaustive list, but you have an idea. When we talk about banks, you have the biggest players. You have the Chase of the world. You have Bank of America. You have Citi. You have Wells Fargo. You have Bank of America. I mean, I already said it. So you have the big players, okay? And for credit unions, you have Navy Fed. You have it really depends. And there are some videos that you might find interesting. We have covered this topic at length on other videos. So you want to check, for example, 5 rare low doc business loans for startups and very young companies. The top 5 instant approval unsecured business loans for micro businesses. 10 large business loans with EIN only guaranteed approval. The top 10 EIN only large business loans for purchase order financing. Bad credit is okay. The top 5 EIN only large business loans based on balance sheet. And 5 rare business loans without income proof. Next, I want to talk to you about banking. Yes, 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 yes. You need to have NPR at the business and personal level. Folks, when we talk about NPR, we are speaking about deposit accounts. The funny thing is, we have been hearing people actually speaking on YouTube about NPR, and they talk about all kinds of accounts. No, when you want to consider the strength of your relationship with the bank, you don't want to consider debt accounts, liability accounts. No, you only want to pay attention to asset accounts, savings, check-ins, retirements, IRAs, investment accounts. Those will constitute the fulcrum of your relationship with the bank. Okay, don't count your credit card accounts or your loan accounts with the bank. Big decision time. Let me ask you a question. Do you currently have a strong relationship with the bank, with the national bank, with the community bank, with the regional bank? Talk to me about that. Talk to me about the strength of your relationship. The reason why I'm asking that question, if your job is to get a large business loan with bad or fair credit and you have no money at the business level because you got to have some cash at the personal level. So if you have no money at the business level, aka no sales coming in, you want to parlay your relationship at the personal level with the bank into a business relationship. Did you hear that? You want to parlay the relationship at the personal level into a great business relationship. So one thing you need to understand is that when we talk about business lending, big banks will actually cover all kinds of asset-based lending. So from manufacturing equipment to office furniture and everything in between, you can get a loan to do all kinds of stuff: medical, dental, and vet equipment, manufacturing equipment, construction equipment, commercial vehicles, office furniture and fixtures, phone systems, computer hardware, and software. And you can have this with many players. You have Chase. Chase Bank offers this kind of equipment financing. You have PNC Bank. You have Bank of America. You have US Bank. And you have Wells Fargo. Now you have to look if your credit union or your current bank offers that kind of service also, but it's called asset-based lending, equipment financing, all that kind of stuff. So you got to look at your relationship with the bank, and you have to say, listen, right now I'm a startup, or right now the business is going through some hard cycles. My business is seasonal or cyclical, whatever. I'm not making any money, but I do have a strong relationship with you at the personal level. And is there any way we can find a solution for a business loan? And if you do things properly, if you have a business plan, if you have projected sales data, as I told you earlier, if you did the homework that I told you to do, guess what? Your chances of being approved will be higher. Let me talk to you now about the application. Okay, we're still having a conversation about how to get a large business loan with bad or fair credit and no money. And so how do you actually apply for asset-based lending? Okay, folks, again, the only loan that you can get, this is not really the only loan, because there are cases where you might get an unsecured business loan. But the thing is, if you have no money coming in at the business level, you have a bad or poor credit, you are more likely to qualify for an asset-based loan. So you need to evaluate your business financials. So before you apply for this kind of loan, you want to evaluate your business financials. Here, of course, we are speaking about projected data. It can be projected or it can be actual. Okay, balance sheet, profit and loss statements, your sales forecast, particularly helpful for newer businesses. Again, projected data, business bank statements, and business tax returns. You need to identify your assets, right? So we're speaking about accounts receivable, agent statements. This is a schedule that helps you see how strong your AR is, your accounts receivable is, your inventory list, your machinery and equipment list. Basically, if you go to your balance sheet and you see in the asset category, you will see current assets and long-term assets. So fixed assets. So PPE, it's called PPE, property, plant, and equipment. This is where you look for machinery and equipment to see what can qualify for that. Make sure that your assets are free and clear. It's important because the business lender will perform a UCC search on your company. So this search tells the lender whether any other creditor has a legal interest, known as a general asset lien, against your personal or business property. So your assets must be free and clear. We're speaking here at the business level, of course. and you want to complete your application and submit your documents. Okay, be aware that some lenders might require that you have your financials audited by a third-party agency before your application can be processed. So you want to check directly with the lender to clarify that step first. And you also want to preview your offer and commit to a due diligence. So if they approve your offer, they might actually do some due diligence on your business to make sure everything is legit, and then you can actually qualify for the loan, and that your business is indeed what you say it is. And you might also undergo a field audit. Again, it depends on the industry you're in, and you just gotta wait for final approval and funding. That's just what it is. All right, folks, this is it for today's conversation. I was talking to you about business loan, a large business loan with bad or fair credit and no money. How do you get it? How do you get approved for it? First, you need to plan. Planning is quintessential. Number two, you need to understand the basics of your businesses. Think about your financial situation. You want to think about the loans. The loan typology is important. Who are the lenders? Who are the players in this space? You need to know them. You need to have a relationship with your current bank or banks for that matter, and you need to know how the application process goes. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.